What's going on with the Arizona real estate market? Is it booming? Is it busting? Are we going to see a bunch of foreclosures? That's a question I hear all the time because it's been such a strange period of time during COVID. Of course, we had the big real estate boom, and then we've had it be a lot quieter for the last couple of years. And so it's a really interesting time. So today I'm going to share with you what's going on with the market, what to do if you're planning on buying or selling in the next year or so, or just if you're curious what's going on with your home value and what's happening in the market. I'm going to answer all those questions. And at the very end, I'll be sure to share with you that question that's probably been on your mind, which is there a looming foreclosure glut coming? Are there going to be a bunch of foreclosures coming? And I'll talk about that at the very end. Hey, my name is John Glutch, and I am a real estate agent. Been selling homes for 20 years now in the Metro Phoenix area, sold a couple thousand properties. I really like to keep a close eye on what's going on in the market. So let's dive right in. The first thing I want to talk about is what's going on with the Cromford Market Index. So the Cromford Market Index is a fantastic tool that Mike Orr, who used to work at the statistics department at Arizona State, created for us, and it measures supply and demand. So how hot is the market? And you can see in this chart here that there is that black line, that kind of consistent black line that goes up and down. That is the index. That's telling us how hot the market is. And you can see it's very good at predicting what's going to happen with appreciation. So when that black line goes up, sure to follow is high appreciation. When it goes down, sure to follow is depreciation. And so we can see that when the index is about 100, that's like a balanced market. Anything above 100 starts to get into seller market territory where we're seeing a hotter market. If it's below 100, then we're getting into buyer market territory. So what we're seeing right now is that, of course, we had that big COVID boom, but then after that, we saw things get much, much cooler. And that's the way it's been for a couple of years now. And so the Cromford Index right now is at a pretty low period. It's in the 70s, 80s, depending on what market you're in. And let's talk a little bit about that because it does matter what area of town you're in. And so if you are in Fountain Hills, for example, you're looking pretty good, right? The market's pretty hot right now. Paradise Valley is doing well. Scottsdale, you'll notice that the markets that are doing the best are the high dollar markets. And that's because the stock market has been crazy. It's at an all-time high. And the luxury real estate market tends to go as the stock market does. But if you're in a more average part of town or one of the less expensive parts of town in terms of price, then you're going to see that it's doing worse. And generally speaking, the further away you get from kind of the center of town, the worse it gets. And so the areas like Maricopa, Buckeye, Queen Creek, not doing so hot, seeing those markets really soft. So down in the 40, 50, 60 range, that's a tough days, right? If you're listing a home in those areas, it's a lot tougher to sell. And there's definite negative pressure on pricing. Whereas if you're listing a home in Fountain Hills, Scottsdale, Paradise Valley, you're doing pretty good. You're going to probably sell that house quickly. And it's the opposite if you're a buyer, right? If you're a buyer in a more expensive market, you're probably going to be up against some competition. You might have to pay closer to asking price as opposed to Price, Santan Valley, Goodyear. You're going to have much less competition, a lot more supply, and you're going to be able to get probably under asking price in those scenarios. So it really does depend on where you are. I like this little graphic here. This is very indicative of what's happening. We've got a situation where the housing industry is kind of waiting on mortgage rates, right? As soon as those mortgage rates drop, which we've been hoping for and forecasting for a couple of years now, we do expect there to be a lot more transactions. But I don't just mean buyers. I think that what will happen probably as mortgage rates goes down is we'll see more buyers and sellers. There's a lot of sellers who currently are waiting around to sell their property because they're stuck, right? They've got a 3% interest rate and they don't want to sell their home and go buy something at 6%. So they are waiting. And so as soon as those interest rates drop, I don't expect much to happen in terms of the market heat. I think what we'll see is just more transactions. So the housing industry being realtors and title companies and lenders, we're all kind of hoping for that mortgage rate drop so that we can get back to business and get active like we've been in previous years. But in terms of what's going to happen to pricing, I don't think there's going to be a huge swing in pricing based on what happens with the interest rates. But I do think we'll see a lot more activity, a lot more supply and demand enter into the market. Now, what's this doing in terms of appreciation? So what does this all look like for the actual numbers? So what we're seeing is that across the country, I like to show these stats, kind of interesting to see what's going on across the country. New York, Chicago, Cleveland, some of these areas are doing pretty well. Appreciation is relatively high, all the way down to like maybe more normal levels of appreciation like Charlotte, Minnesota, Washington. Well, what's happening in Phoenix? Phoenix not doing so hot, right? We're down almost 1% year over year. These are the Case-Shiller numbers. These are national numbers that are published, and they're a little bit behind. These are about 2-3 months behind because that's their publishing schedule. It's actually probably a little bit worse than this. So this is all of Metro Phoenix. Again, this is going to vary a lot depending on what part of town you're in, but all of Metro Phoenix down about 1% this year compared to last year. Phoenix dropped from 14th to 16th place this last month, but there's still a few areas that are doing relatively well. So that's what's happening on the national scene and in Phoenix in terms of appreciation. Another trend we're seeing is a lot of rental properties. So lots of sellers are going, well, look, I don't want to live here anymore, but I don't want to sell. So I'm going to put my house on the market. And that's a tough deal because you are up against lots of competition. So rents are really flat or down in a lot of areas. So becoming a landlord that you didn't want to become is not an awesome proposition, especially when house prices are going down. I have this conversation with sellers really regularly where they're like, well, maybe I should just rent it and hang on to it. And my answer to them is always the same, and I'll share it with you, which is if you're happy to be a landlord for 20 years, awesome. I think it's a great idea. Hang on to that thing. You've got a low interest rate. Why would you sell this property? But if you've got a high interest rate or you've got a lot of equity in the property, then it may not make a lot of sense because you hanging onto that property in a depreciating market, or if your time frame is short, if you're going to sell in the next 2 or 3 years, the property is becoming less valuable right now. And I don't anticipate that changing a lot anytime soon. So why would you hang on to an asset that is becoming less valuable when you don't really want to be a landlord? If you've got some equity in that property, better to cash out and put that money to work some other place rather than being in a house. Now, if your interest rate's really low, or if you don't have very much equity at all, then maybe it makes some sense. If it cash flows, if you can rent it for more than your current payment is, then awesome. That may make some sense. But in general, becoming an accidental landlord, not an awesome proposition. I try my best to help people understand the pros and cons of that. And in most cases, it makes more sense to sell than just to hang on to it as a rental. And we're seeing that there's a lot of rental competition right now. That question that you may have been asking yourself, what's going on with trustees, with foreclosures? And here is the situation. We are not seeing a boom in foreclosures. So this is the number of trustee deeds by month. And you can see this is tracking back to 2014, which was kind of a normal year. So, 2014, 2015, the further you go back to 2011 and 10 and 8, et cetera, those numbers are going to get higher and higher. So this trend you see on the chart does continue to the left, meaning older years are similar. And we saw the foreclosure boom in like 2008, where the number of foreclosures was gigantic. But you can see it just kind of normalized in the 16, 17, 18, and it's just gotten less and less and less foreclosures. So we are seeing a little bit more in terms of foreclosures right now, but nowhere near the crazy amount of foreclosures we saw in the 2000s, 2008-ish, 2007, and not even normal. Like the number of foreclosure sales that are happening right now aren't even normal. We're not even close to what would be considered a normal number. So we're not seeing the data. There just are not a lot of people who are in trouble. And so our expectation is that pricing, depending on where you are, again, going back to what part of town you're in, is going to either appreciate a little bit. If you're in the higher dollar marks, we're seeing properties appreciate, 3, 4, 5%, or stay flat if you're in that 100 range, or decrease if you're below 100. If you're thinking about, okay, what am I going to do? Am I going to buy? Am I going to sell? This is a good chart to look at to see what's happening in terms of pricing. So as a seller, this gives you a good sense of what's happening on pricing. And as a buyer, you can look and go, look, I've got a little more negotiating power the lower the number is on that Cromford Index. And I hope that helps as you're considering making a decision and wanting to know what's going on in the market. This is the data. And this is very good at predicting what's going to happen in the next 3 to 6 months. What's going to happen after that, we're all just guessing, right? If the interest rates go down 2%, that could change things very dramatically. If they stay the same, we'll probably see similar results moving forward. Thanks so much for taking the time to listen to this today.